Hello traders, Gary Wagner here at just about 2 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, December the 2nd, 2020, and this is the Daily Report for Gold and Silver. Continued optimism that they will be able to pass some sort of fiscal stimulus within the next couple of weeks has fueled gold and silver to higher pricing yet again today. The quandary that I have right now is why I am absolutely certain that by the 11th of December, when the government runs out of money, they will have some sort of stopgap budget to account for bills being paid, including their own paychecks. Yet, I am wondering whether or not they'll be able to pass legislation that will help the millions upon millions of unemployed Americans and those suffering through this pandemic. If they cannot, it will truly be disappointing. Let's take a look at our current price board. In anticipation of passing a fiscal stimulus bill over the next couple of weeks, the optimism continues in the precious metals markets. Although not as much of a rise as we saw yesterday in gold, we saw really good follow-through, up $15.50, with February gold currently at $1834.40. When we look at spot pricing, that is trading close behind it at $18.30, putting it up about 10 cents. Silver showed a respectable gain of about 0.5%, $24.22. And when we look at the dollar, that was down about 0.3%. So it did account for approximately 1/3 of the move in gold and a little bit over a half of the move in silver today. Traders, I also want to address both GLD and SLV. Those, of course, are the trusts or electronically traded funds for those two precious metals. Most likely, we will be sending out a trade alert for tomorrow morning to begin accumulation of those two ETFs. We'll talk about why we held back on our trade alert in terms of gold futures and silver futures when we look at our technical studies. We had a very nice follow-through in terms of price gains today in gold. In fact, we got the confirmation for the engulfing bullish that we identified on yesterday's show, which brings me to a question that was submitted by one of our subscribers, and he asks if the pattern in engulfing bullish is a 2-day pattern or a 3-day pattern because it requires confirmation. The actual pattern is a 2-day. However, it is not considered to be a strong or valid signal or pattern without the confirming candle. So the way I would look at it is it needs to contain all 3 candles before acted upon. Now, we did not send out a trade alert today. We are going to be starting our accumulation process beginning tomorrow with GLD and SLV. We can honestly say that we have a market that is utterly headline driven, and this market is moving up off of the optimism that a fiscal stimulus package will in fact be forthcoming and forthcoming quickly. However, if they are unable to reach an agreement, and we know that there is a distinct possibility that that could happen, and so that being said, I want a little bit more information on the negotiations and if they've come to some sort of an understanding that makes the public believe that they'll actually be able to pass legislation. In other words, on a fundamental basis, I want more clarity as to where the negotiations are and the likelihood that something will come out of that. And it is precisely for those reasons that we are waiting a little bit longer before issuing an actual buy trigger on gold futures and silver futures. Lastly, because we have seen gold prices shoot up so much, about $80 over the last 3 trading days, that there's a possibility we might get some sort of a pullback and get a better entry price. So traders, we will send out a trade alert via SMS text message as well as email as soon as it is warranted. Technically speaking, In terms of our levels of support and resistance, we have major support at 1775. That represents the 50% retracement. We then have the next level, which is a little bit more minor, at the 200-day moving average, which is currently set at 1806. In terms of resistance, our first level is 1848, and above that is 1883, the current placement of the 50-day moving average. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.